Hello viewers, I Mohammed Abdul Habeeb welcome you all to our application AIMS tutorial. In this video, we'll be discussing recording of business transactions, journal entries. Here is the problem, page number 63, question number 5. Generalize the following transactions in books of Dinesh. The transactions are given for the year 2019 for the month of April. Here are some of the transactions from April 1st to April 14, and we are required to prepare journal entries. Here is the solution. The heading will be taken as journal entries in books of Mr. Dinesh. As Mr. Dinesh is the owner of the business, it will be recorded as journal entries in books of Mr. Dinesh. And the format for journal entries is date, particulars, LF, which stands for ledger folio, debit amount rupees, credit amount rupees. The transactions are given for the year 2019 for the month of April. And the first transaction is given on April 1st as Dinesh started business with cash 50,000. So here the date will be taken as 2019 April 1st. As cash is coming into the business, cash will be debited as cash account debit 50,000, and the investment which has been done by the owner into the business is called as capital. So it will be recorded as to capital account 50,000. So the journal entry becomes cash account debit 50,000 to capital account 50,000, and the narration will be being business started. Then we have another transaction on April 2nd, sale of goods for cash 10,000. It means the business is selling the goods, it is an income, and the business is receiving cash, so cash will be debited. So here the date will be taken as April 2nd. As cash is coming into the business, cash will be debited as cash account debit 10,000, and sales, as it is an income to the business, sales will be credited as to sales account 10,000. So the journal entry becomes cash account debit 10,000 to sales account 10,000, and the narration will be being goods sold. Then we have a transaction on April 4, purchase of goods for cash 15,000. It means the business is purchasing goods. It is an expenditure to the business, so purchases will be debited, and as cash is going from the business, cash will be credited. So here the date will be taken as April 4, and the journal entry will be purchases account debit 15,000 to cash account 15,000, and the narration will be being goods purchased for cash. Then we have a transaction on April 6, sold plant and machinery for cash 5,000. It means the business is selling plant and machinery, and return the business will be receiving cash. So here the date will be taken as April 6. Cash is coming into the business, so cash will be debited as cash account debit 5,000, and plant and machinery is going from the business, so plant and machinery will be credited as to plant and machinery 5,000. So the journal entry becomes cash account debit 5,000 to plant and machinery account 5,000, and the narration will be being plant and machinery sold. Then we have a transaction on April 10, cash paid to Rahim 3,000. So here we are paying cash. Cash is going from the business, so cash will be credited, and Rahim is the receiver of the amount, so Rahim name will be debited. Here the date will be taken as April 10, and the journal entry will be Rahim account debit 3,000 to cash account 3,000, and the narration will be being cash paid to Rahim. Then we have a last transaction for this problem on April 14, salaries paid 8,000. So as we are paying salaries, it is an expenditure to the business, so salaries will be debited, and cash is going from the business, so cash will be credited. So here the journal entry on April 4, the date will be taken as April 14, and the journal entry will be salaries account debit 8,000 to cash account 8,000, and the narration will be being salaries paid. Hope you have understood the topic. See you all in next video. Thank you.